So I have my notes on my phone, so I won't be texting, I promise. So the point of this panel is a few things. The first is to go over sort of what is the state of the blockchain and blockchain technology. Why does it matter? Does it matter to you specifically? And if it does matter, what do you do about it? And so we have an awesome group with us, so thank you guys so much for being here for the panel. I thought what we could do first is to have you guys kind of introduce yourselves, your involvement, and kind of what you do day to day and why you're relevant to this conversation. Nikhil, do you want to start?
Sure. My name is Nikhil Kalghatgi. I'm a partner at CoVenture with Ali as well. We've got a bunch of different strategies. One of them is crypto. I run the crypto business, and there we've got lots of different funds, asset management strategies. We got things that are passive. We got things that are actively managed, more like a traditional hedge fund. We've got publicly listed vehicles that we're working on, and then we make venture capital investments in the ecosystem, so pretty diversified.
Hi guys, my name is John Dempsey. I'm VP of Product at Chainalysis. So essentially, we prevent criminals from using cryptocurrency. Public blockchains are a lot more public than you think. They're a lot more transparent than you think. And essentially, 80% of all transactions go back to about 1,000 services, and we've mapped all of them. So we know the legitimate services like Coinbase and Square and Robinhood, and then we also know the bad stuff like dark web markets or large-scale hacks or terrorist financing. So we sell investigation software that's used by law enforcement and governments around the world. And then we sell compliance software for anti-money laundering that's used by banks and big crypto businesses.
Hi, everyone. Angus. I'm an advisor to, on cryptocurrencies and crypto assets in the space, generally to institutions, regulators, and startups. Previously at Ernst & Young, where I jointly established our practice for this and led the financial services side for 3 years. I became much more of a Bitcoin, not blockchain guy a couple of years ago. So I'll look to provide a little bit of context as to why.
That'll be fun. Hey, I'm Kevin Wang. I'm a co-founder of Orion Crypto Mining, which is a hardware company that's building next-generation mining hardware for Bitcoin and other SHA-256 coins. And prior to that, I was head of product at a blockchain fintech company here in New York called Paxos. Paxos is building sort of blockchain platforms for the financial services industry. And Paxos also owns an exchange called itBit. itBit was the first federally regulated crypto company here in the US.
And so, Kevin, would you be open to kind of talking to us from a high level, just mapping out the ecosystem? There's private blockchains, there's public blockchains, there's, who are the players? What are the different protocols? Just from a really high level to get us started, how do you kind of go through that?
Yeah, sure. So blockchain, I'm sure you all know, has become one of those buzzy, catchwords that doesn't really mean anything these days, and it means everything.
I put blockchain on everything.
Yeah, just blockchain, yeah. Well, there was a iced tea company.
Long Island Iced Tea.
Long Island Iced Tea. They just renamed,
blockchain.
They just put blockchain in their name, and their stock shot up 400%.
300%.
Yeah, something like that.
They got in a bit of trouble.
Then they got in a bit of trouble for that. Yeah, just the motto is just blockchain everything. But no, I think it's important context, especially for a product-centric audience, to make some distinctions. So the way that I like to think about it in very broad strokes is three big buckets in terms of the blockchain industry these days. There's the public blockchains, and those are often associated with having a cryptocurrency component. So Bitcoin, I'm sure everyone's heard of, is the most popular. It was the first one. It's what introduced the concept of blockchain to the world. But there are other ones like Ethereum, you may have heard of, Litecoin, Stellar. Those are all public blockchains with a cryptocurrency on top of it. And there's literally thousands of other ones as well. And the characteristics that the public ones have in common is they're fully open. Anyone can participate. Anyone can join. All you need is an internet connection, some minimum hardware specs. And if you wanted to start using Bitcoin today, you could. You could set up a wallet, start receiving Bitcoin. You can start mining. You can run a full node. There's very minimal barriers to entry. And that's the point, right, is that it's open. These are usually open source. So they've got sort of core developers that work on it to make improvements and features. And sort of, again, anyone can participate. So that's the first bucket, probably the most well-known. Then the next category would be like private or permission blockchains. And these are like companies trying to use the underlying blockchain technology to build new products. And these are often divorced from a currency or a coin. So for example, the company that I was at, I mentioned Paxos, we were building our own proprietary blockchain to do post-trade settlement for financial services. So our customers were the large banks that were trading with each other. And how can we create a network of these banks to be on our blockchain? And these ones, obviously not anyone can join. They're permissioned. So in a regulated environment like financial services, maybe that's a good thing. You don't want necessarily anyone to be able to join. So that's the second bucket. And then the third one I would say is now there's an entire ecosystem of companies and products that are supporting the new crypto economy or the blockchain economy. So John, for example, at Chainalysis, they do forensics, right? They analyze activity that's on the chain. Or probably a lot of people have heard of Coinbase. They're like an exchange, right? They're called an on-ramp to getting Bitcoin. They themselves are not using blockchain technology to build their apps, but they sort of help service and support the ecosystem. And so there's a lot of those types of companies, people that are doing key management and hardware and reporting and custody. So all these other companies popping up to support this new technology. So those are the kind of the three broad buckets of how I view the current state of the industry.
Cool. And for the rest of the panel, what was the moment in your own career personally where you sort of discovered the technology, and did any of you have sort of this aha moment of like, holy moly, this is going to really matter? And it was like, there's this aha moment, and what was that?
So I was at SoftBank for a bunch of years as a venture capitalist, and we had this portfolio CEO that had left, and he's like a superstar, and we were like, well, I want to go visit him, see what he's up to next. And so I went out and visited him, and he's in Silicon Valley, and I went and said, I was like, hey, what are you doing? And he's like, I got this crazy idea. And he was the CEO of a large like fintech kind of company. And he's like, it's called a distributed ledger, okay? This is 2011. And I'd never heard those two words put together before. And it was like an hour and a half into this conversation where he was explaining like how blockchains work. And he never used the word blockchain, by the way. It was, basically a breakdown of Satoshi's white paper in human terms. And I still didn't get it. So that definitely wasn't my aha moment. Thankfully, that guy created Ripple and ended up becoming a wildly successful company. But he got me involved in the ecosystem, and I opened up a couple of accounts on weird exchanges, and then a company called Coinbase opened up in 2012, and so I actually sent what was a lot of money to me at that point in time, and I moved it instantly, and I couldn't believe I had moved that much money instantly, and I was like, I was by myself. I was like, anybody see this? I was like, this really even happen? And it was wild. I was like, this can't happen in real life. Usually there's like, wires, and it takes like hours, and I'm still like, did the wire go through? I don't know.
You could have sent it to me.
I know. And I couldn't, it just blew my mind. I was like, I want to take a picture, but it already happened. So that was like, aha moment. This is going to be crazy.
How about the rest of you guys? What was your first use case where you're finally sitting there like, oh, I actually know how this is going to be part of my career or something I'm going to really use?
Go next, John.
For me, it wasn't a use case. It was actually from a philosophical perspective in a way. I was taking time off between jobs and doing a bunch of reading, and people were sending me all these kind of bizarre blog posts about fat protocols theory and all these things. And at the same time, I was reading Sapiens. How many here are familiar with the book? A lot of you, actually. Not surprising for product people. And so in it, Yuval Harari talks about how humans struggle to coordinate themselves over a certain number of people, right? I think like over 150, 200 people. And what has effectively organized people since then over time has been governments, corporations, and money. And when I was reading that side by side with blockchain, if you read kind of the far future, it actually potentially can disrupt those three things that organize people and provide a new way to transfer value between individuals.
And so, John, when we were back there earlier, sort of talking about even this panel, and we were talking about the things that you guys are doing, I was like, maybe we should change the panel. Maybe we should just be a fireside chat. You can talk about Chainalysis. Can you tell us a little bit about what you guys are doing at Chainalysis and how you guys are using the technology?
Yeah, so if we back up from this long-term vision of what blockchain could be, today you have programmable money in Bitcoin, and then you have speculation on what these things are going to potentially be. And unfortunately, a lot of the activity in cryptocurrencies has been illicit activity. So when the company got started, interesting story about how the company got started was, you may be familiar with Mt. Gox. In 2014, there was one exchange that ran 70% of all Bitcoin trading volume. It was hacked. $500 million were stolen. The authorities actually handed the servers to Chainalysis, and we were the company that actually worked that case.
By the way, I was part of that hack. So
Were you?
When you say that, that's like just digging the knife deeper in my heart.
Some of that money ended up being restored. Otherwise, we've been continuing.
Right after the hack, Nikhil got a really nice house.
Nice.
I'm kidding.
But you make that point. You laugh. This is actually how these criminals get caught in cryptocurrency. Is you can hack an exchange, but you need to buy a house. You want to go on vacation. You need to buy a boat if you're a criminal, right? So you need to find these right?
Boats
Everybody
love
wants a
criminal.
yacht.
I love boats.
And so you need to find these fiat off-ramps, these exchanges where they have, if they're regulated, have KYC, know your customer laws, and that's when these people get caught.
And so, Nikhil, can you we're talking mostly about blockchain, although inevitably you end up talking about Bitcoin and Ripple and cryptocurrencies. Can you sort of separate the two topics? Are they always associated with each other? Do they have to be associated with each other? Does this group here, should they care more about the blockchain or cryptocurrencies or?
So I think it's important to think about where we are in the whole landscape of cryptocurrencies and blockchain development. Although it is literally 10 years old since inception, we're not even in the Bronze Age. We're in the Stone Age in terms of product development. Everything that's being built right now are the fundamental building blocks before you can build the machines and the companies that are actually useful to humans and people. We're building the things that are if from a mining perspective, we're just discovering what gold and silver and copper are, let alone building the machines to help take it out of the ground and then use it for things in buildings. We're very, very, very early. So the applications right now are rudimentary, right? They're trading and speculation because they're liquid, and that's really exciting to a lot of retail consumers. So the first real application of cryptocurrencies and blockchain together is speculation, by far. That's got everyone excited, and that's awesome. By the way, I think it's absolutely fabulous that there was any sort of use case to get people excited about it. And I know a lot of it was illicit in the early days, absolutely. But for there to be a large, massive movement, you need these big driving forces. I'm glad we've moved away from a lot of I'm glad we've found additional things besides illicit activities. But hopefully that's still a small part of the world of crypto. Chainalysis being successful notwithstanding. So when I think of people that say blockchain, I'm into blockchain, not into crypto, it's a little bit like saying I'm into chicken, but I don't think the egg is going to be around for very much longer. They are inextricably linked, and so to separate them out entirely doesn't make a lot of sense. But of course, you don't necessarily need to have a vibrant crypto that exists and is traded and is vibrant in order to be a successful blockchain. Good examples would be the permissioned, controlled blockchains that are really run by companies. Now, if you're a crypto enthusiast or an OG, an early person in the ecosystem, you would probably say permissioned blockchains aren't real blockchains or something to that effect, right? Because really the whole movement is about decentralization, and it's about eliminating these middlemen. And centralization has amazing, amazing virtues associated with it. And we all survive on a daily basis because of Apple having great products that are highly centralized, and Microsoft and Google and Amazon doing the same thing too. But I think there's a whole bunch of use cases that don't exist today that blockchains are enabling, that cryptocurrencies are a part of the story, but aren't necessarily the main the main course. So the way I try to think about it is blockchain's very, very useful for lots of activities that we are still discovering today. And maybe that's actually a good next question. And
Hey, I got the question.
Nikhil was supposed to be the moderator, so you're seeing what's happening, right?
And cryptocurrencies, that's the world that I live in. I love trading cryptos. I think that it is not just a great living, but it's enabling a whole new world of finance, specifically. So that's kind of how I think about it. The world of cryptos live in a world of finance. I think we're going to have some applications around utility tokens. Think like, tokens that allow you to do things in the digital world. It's like one like use case is, would we need a blockchain for all of our electric vehicles in the world? So that if someone wanted to if your autonomous electric vehicle wanted to pass the car in front of you, they could actually exchange a really tiny amount of money in a distributed manner. You wouldn't have to go through the banking infrastructure. Now, this is so far-fetched and crazy, and there's so many assumptions built in. You can see how people are really focused on trading and not on a lot of the applications yet.
And so we'll come back to sort of favorite use cases and sort of what you guys hope to see in the future. But even before we get there, Angus, when you're talking to people at sort of larger companies, so not startups, and probably most of the people in the audience today are probably at larger businesses or growth companies, and they're having the conversation with you of, hey, should we be exploring the technology? Should we be actually implementing it? Or should we run from it because if we did implement it, it would actually destroy our business model? How do you have those conversations, and how do you help those larger companies get through that framework of thinking?
These conversations come about for various reasons, and there are different directions that they go. A lot of my clients are financial institutions, and a lot of them were looking at this technology because when you're constantly told that a technology is going to make you redundant, it would be a little amiss to not look at it. The challenge that a lot had was there'd be a couple of things. One is, look, I don't really understand blockchain. Can you explain it to me? And the other thing was, we want to use blockchain. Where should we use it? And I think both of those questions are a little bit flawed. The first one, I don't really understand blockchain. Something that I found was that a lot of people understand what this technology is meant to do. What they don't get is how it's relevant to them. And I think that is not because people are stupid, but because this technology has been massively oversold for what it can do right now. And I think that a lot of, and I'd get similarly that with people coming to me and saying, look, I just don't really think that Bitcoin is going to be a thing. I mean, maybe in the developing world. The developing world's 85% of the world's population. It's a reasonable market. So, but it's where we have this, and I actually, for a lot of that, think that, yeah, I'm sort of on the same page with that because, the financial system for us here works pretty well.
We live in a really privileged place here where we can trust the value of our currency.
Yeah.
I was actually, when I was taking time off, I was living in Buenos Aires. I was in Argentina. And when you want to buy a house, what you do is you go to the safe in your house and you take out US dollars and you put it in big duffel bags. And then you go down the street and you go and then people count your money at the house closing.
Yeah.
Right? They don't trust their own currency. And
if you don't trust your own currency, this actually has some immediate value for you. The second thing, so the first thing is a lot of you have probably heard enough stuff about blockchains that you understand conceptually what it is. And when you're looking at building a product, if this isn't the technology that comes to mind that you should be using, you probably shouldn't be using it. The second piece with we should, how can we use a blockchain in our business, sort of derives from that, right? We don't develop good products by starting with the technology and seeing where we can jam it. We start with the problem, or what's the problem that we're looking to solve. So that was a lot of the questions that we'd sort of get.
So wait, are you saying we don't have problems today that blockchains would be valuable for?
I think that a lot of problems where people think that blockchains will solve them misunderstand either the problem or what blockchains can do versus distributed databases.
So what's an example of a problem that everyone was super excited the blockchain is going to be super relevant here, and you're like, the technology is not the problem, or the decentralization is not the problem? What's a classic example of that?
Supply chain is probably the one that keeps on coming up, and the reason being, if supply chains are enormously complex. Well, your typical supply chain, obviously they vary, but you have manufacturer, you've got a shipper, you've got various warehouses, you've got the end user. The issue in coordinating all of that is a people thing. You got to get everyone together. You got to agree on all of the various stages, the receivables, the payables, the various trade sign-offs. Once you get everyone together and agree on the paradigm that you need to build this solution under, you've solved most of the problem, right? You usually establish some legal entity to coordinate all of this, to build the technology, and to build that product. Let's say we do it on a blockchain. Blockchains are specifically designed, as they were in Bitcoin, to prevent any one entity from arbitrarily changing it or updating it. So you got to keep in mind that when you're building a blockchain, you are preventing any sort of central administration, upgrades, coordination. Basically, any system maintenance you do is going to be an absolute nightmare. And the question is, well, we can create a blockchain that it doesn't do that. Well, then why are you using a blockchain at all? So that was where I sort of got to. Versus Bitcoin, where you've got money that can move like data. And that was what initially brought me to this, that when we want to move any data, any information that we have, we can move it instantly around the world, except for money. We can now do that with Bitcoin. Now there's a hump that we need to get over with adoption of this, but I think that's quite exciting, and I think there's a lot of people get very caught up in what this could be and not focusing on what problems we have now that this can actually solve.
So, Angus, I'm curious to get your thoughts. Walmart made headlines pretty recently announcing that they're sort of doubling down on their blockchain efforts for supply chain, and they want all their suppliers to get on their blockchain solution by 2020 or whatever it is. So based on what you're saying, do you think there's actual merit in what they're pursuing, or? I
think so. I won't comment on specific companies because I've learned we shouldn't do that. But the one thing at 10 years at a big four, but there are different reasons why companies will pursue certain things, right? And for one thing, we're talking about Walmart now, right? And how innovative they are in building technology. And I think that there's also the amount of money that goes into these sorts of projects isn't as big as people think it is. So if you're looking at, and again, a lot of these things, projects with their POCs, with their implementations, are massive learning opportunities. And entities that I've worked with, and myself included, had I not spent a few years working on this, I wouldn't have got to where I have. And a lot of the organizations that I consult to wouldn't have got to that point either had they not experimented this. So it's, I don't think it's as simple as someone's made an announcement, there's value here, because a lot of people thought that mortgage-backed securities were a pretty good thing back in 2008.
And what are the types of companies that if somebody here works at one of those businesses, they should be running away? They should say, oh my God, if we take away trust and we stop taxing our customers by trusting us, the blockchain or decentralized ledgers or whatever we want to call them would totally screw up our business model. And if any idiot at our company says maybe we should look at it, we should be pounding the table saying, stop.
It's probably a lot.
Yeah.
How many people here own any crypto? Wow.
Pretty good.
I'd say a significant majority.
By the way, I'll lend against it if anyone wants.
That's great. Now, how many people here have done anything related to crypto or blockchain in their professional life? Wow.
Actually, more than I thought.
More than I thought. So say like 15% or something like 20%. Maybe you guys keep me honest. That was actually a lot more than I would have expected.
More than I thought, yeah.
The point I was attempting to make was
You guys
that
messed it up.
there's very few applications today that are actually being put to use, and for good reason. If Ticketmaster, we talked about this a little bit backstage, but if Ticketmaster were to say, you know what, we're going totally decentralized, I think that would be a disaster for their core business.
Why?
Ticketmaster kind of relies on centralization like we all do. It's unscalable right now to apply it in their business. I don't think there's actually any value proposition to give other people control on their product, right? The fact that they are the arbiter of trust. Big bands and venues go to Ticketmaster because Ticketmaster knows they can control it, and if something happens with the fake tickets, it's Ticketmaster's.
By the way, we know Angus is not going to comment on this because we're now talking about one specific company.
We'll call it fake company. It's called Picketmaster.
Micketoaster. Yeah.
I mean, it's a lot of companies, right, and industries that rely on people trusting them, right? Like for me, being a product person with a pretty limited technical depth, I try to distill everything down to like what is the core value proposition, like what is the essence of this tech. And to me, this technology is specifically good at disintermediation and democratizing trust, right? It was designed so that you don't have to trust entities with your assets, with your information, that you can take control and you can be sort of sovereign and autonomous with that. And that's goes contrary to how a lot of for-profit businesses work, is that you pay your bank fees because you trust them to hold your money, that they're going to protect your money, that they're insured and all that. You pay the government taxes because you trust them. And so, it sort of can be cannibalizing if some of these companies are exploring alternatives about how they can remove themselves out of the equation. Might not be the best thing for their bottom line.
So I think we should really be clear about the value proposition today versus value proposition tomorrow, right? I know there's a lot of talk about what blockchains can do in the future. Today, they're limited simply by the technology being immature. Full stop, right? The implementations today are very, very difficult to see the value proposition. The second is that if you were to just think of it as cannibalizing existing businesses, that completely ignores the new value propositions that will be enabled. So like the internet, the original internet's value proposition was to allow people to communicate instantly, right? Now, to call that the only use case for the internet is a gross oversimplification considering how many things that core value proposition enabled ultimately. That's almost irrelevant in most cases and use cases of the internet today. So yes, absolutely, 100%. That is the primary use case of a blockchain, is trustlessness. But what massive Amazon, Google size ideas can be created with that, I honestly don't think we really know, but I bet this panel can come up with like 40 really, really great ideas really quickly.
Let's just start listing. No, there's the other thing that I think that this has brought to light is just cryptographic engineering, right? And some people will refer to blockchains as just applied cryptography. A lot of what people will refer to as blockchains don't look like the Bitcoin blockchain, but are just different ways of using cryptography in some sort of engineering products. And it's one of the things that I'll typically advise organizations that say, hey, we want to explore blockchains for this. There is some very cool stuff you can do with cryptography without using what's a very clunky, inefficient data structure that was designed to solve a very specific problem, being the Bitcoin thing. For example, there's one product that I was helping with, which is a decentralized, metadata-resistant, fully encrypted group messaging platform that doesn't use a blockchain anywhere. But it's all fully decentralized, and everyone can, no one can intercept these messages, no one can read them unless they're part of this group channel. And this was actually built for, it's called Such, spelled C-W-T-C-H. It was and designed by a woman who's a very big proponent for the LGBT community, sex workers, people that have been affected by the SESTA and FOSTA thing. So that there, when I say what's being built there, people say, you're using a blockchain, aren't you? I say, no, I'm not. And I think that there is a lot of really cool stuff that you can do in far more efficient ways. And, had you studied cryptography 5-6 years ago, and assuming you hadn't learned about Bitcoin, it's pretty niche stuff that you would have been working on. Now you can, I think it's opened that up. So I generally encourage people to look at what's available with with sort of adjacent technologies as well.
And so I have two more questions, and then we're going to probably open it up to the audience. So start thinking your questions now. The first is, if you're a company and you're starting to think, okay, should I be building a private blockchain or a public blockchain, or sort of a public protocol? How do you think about that? What are the trade-offs? And if people are starting to decide, okay, so this is something that we should explore at a company, which path should we go down? There was some conversation, maybe it should be private blockchains, maybe they should be public, but how do you guys think about those trade-offs?
I sort of agree with what Angus said earlier, that if your company's asking those questions, you probably shouldn't be using blockchain to begin with. I think the good news for people in this room as product leaders is there's a very strong development community out there that's working on some really fantastic things. And there's a gap between the user experience. Consumers don't know why they need it. Financial institutions are interested, but don't necessarily understand why they need it. And I really think that product people can kind of fill that role in between.
And sort of to build on top of that, a lot of this space is being built by communities, sort of inherent in it. But those communities have ended up being really homogenous, right? Like if you look at the panel, not that diverse.
So we had 2 last-minute ringing.
Yeah, but maybe we're probably part of the problem.
We were better before.
So what are the on-ramps of the communities within this ecosystem? How can the people in the audience be a part of that and sort of contribute to that community? And how can we make those communities more readily accessible? I think one of the problems that we've had in the crypto space or the blockchain space is you make it like a club. And if you didn't know about Bitcoin since 2011, you're obviously not cool and you should have bought earlier, right? Like, how do we make it more open and what are the on-ramps if somebody was just trying to get involved today?
I mean, from my view, they definitely need product people.
I think it's wide open, honestly. I think you have to think about what it is your skill set is today and what is the kind of analog that you can move into crypto with. So if you've built great consumer apps before, there are hardware wallet companies, right, that are designing consumer-facing software, and they need far better interfaces than they are today. Well, companies out there need you.
Yeah, I went to Building Bitcoin, which is one of the sort of most technical conferences in the space earlier this year, and we had a session on UX, right? And I think that if you're talking about how you can design something so people will use it, you're pretty early in the industry, right? The main thing is that if you are good at determining what a problem is and designing a solution for it, I mean, you have a lot of room in this space because there's a lot of people that are brilliant, very technically adept at building some amazing technology that's never going to be used because no one knows what the problem is that you're solving. So there's a lot of wrangling, a lot of opportunities in this space, but certainly for outsiders who can step in and say, brilliant, want to get involved, understand the technology, but let's bring this back to reality and what are some problems that we can work on and solve.
In a practical sense, get on Telegram. There's vast amounts of resources. I'd probably say this is the best software community that contributes to learning and self-education that I've ever witnessed. There's
great newsletters, great podcasts. There's tons of information out there.
Crypto Twitter is insane.
Crypto Twitter is quite good.
Yeah, and if you're overwhelmed, there's 1,000 intros to how to get into crypto out there. So it's pretty readily accessible. Plus, the in-person communities are pretty vibrant around the world, from meetups to universities to, every company's got their own Telegram channel with their own meetups in every city of the world. So it's pretty easy to get access.
I think it's exciting because it's something that you can get in now in early stages, and this will set you up for your career for the next 10 or 20 years.
It's so easy to be like the blockchain expert in your company.
So we're in this really, really dangerous time slot of right before closing remarks, and we're sort of between you guys and drinks, which is horrible. But before we go there, are there any questions? I think we have time for, let's call it 3-ish, 4-ish questions from the audience. We have one up there. Do you want to go ahead?
And I've heard a lot of pie-in-the-sky ideas about blockchain in the developing world coming from privileged perspectives. But what can resource-constrained organizations realistically do on the ground when the cost of standing up and maintaining a public or private blockchain may vastly outweigh that of just standing up a private database?
So just in case anyone didn't hear the question, the way I'd characterize the question was there's a lot of people in developed countries talking about how cryptocurrencies and the blockchain can help developing countries from their sort of this high place, and how is how can these developing countries solve their own problems? Where can they find resources? Where can they build their own communities? I don't know if you guys want to take a stab at that.
So I'll take first cut. The way I would think about it is really expensive to build and create a blockchain from scratch. The intellectual costs are pretty high, and that's actually the biggest challenge. But it's really, really cheap to build on top of what others have done in terms of public blockchains. A really good example is Sierra Leone did the first voting system on a blockchain earlier this year, which is pretty extraordinary, and it cut down fraud tremendously. That was a great example, and this is a government doing this, which is usually not a leader. I'm starting to see very similar nonprofits use this for water rights I think in South Africa, which is quite interesting. Another example of an existing infrastructure that was already built, and they said, you know what, we need to figure out how to assign water rights because the people up, that get the water first are taking it, and the people at the end aren't really getting clean water. And what if they could effectively have tradable assets such that they could say, you know what, we don't actually need this much. We're using it because if you don't use it, you lose it, and they can give it and actually make some money on this and create a liquid market. So those are two examples of where they're using applications of blockchains that were very inexpensive. But yes, your point is 100% right.
Good to see you, Tin. I don't know if we spoke about this before, but I think it's at least from the crypto side, there needs to be a lot of education on the ground from people in developing countries as to what this is and why this might be a preferred store of value to other things, right? I don't know the Philippines as well, but say in Afghanistan, a lot of people will move their money into US dollars as quickly as they can and will sometimes buy small gold things. You need to know that whole culture, and that you need to get to the point where that culture will recognize Bitcoin as something viable and not some sort of magical internet money. And that takes education, honestly takes time. And I think
banking the unbanked is such a huge opportunity, but convincing people that here's this digital thing, it's actually worth something.
Well, yeah, and it's allowing people who are unbanked to not have to be banked, to be able to work in this other. And, that's something that, us clowns here based in New York are not going to know, right? But a lot of people, we're seeing more people who learned it over here and are taking it back to their homes in Iran, Palestine, that sort of thing.
Go ahead.
I have two questions. First one to John. You mentioned about using crypto for when you developing country you don't trust your own currency. The spike in cryptocurrency has been pretty volatile. I want to know your take on that, because some people have been blamed for the spike of the price more than one.
That's a great question. So for anything to be a true currency that's worth using, it needs to be fairly stable. And at this point, Bitcoin, people are calling it more of a store of value, maybe something more like gold. Well, there's a limited supply of it. Maybe it holds value over time. But if I'm going to see price fluctuations of 10, 20, 30% over a weekly, monthly basis, I'm not going to.
Did Bitcoin go down?
Check.
Probably in the 30 minutes on stage.
What you're seeing right now, one of the major trends right now is something called stable coins, and these are cryptocurrencies that are pegged to something in the real world. So Venezuelan government actually introduced one tied to the petrol. And in the US, a lot of these, actually, Kevin's company, Paxos, introduces a stable coin. We work with them on it, pegged to the US dollar. And so now I kind of have this this asset that's already in crypto that I can use and gain access to that ecosystem. Makes sense?
Are you guys bullish on security tokens and their ability to kind of democratize tokens?
Yes.
I am.
The question was, are you bullish on security tokens? So I want to combine the last all three questions in one. The first of all, most cryptos are not currencies at all, and I think the idea of payments using cryptocurrencies is a 10-year kind of timeline, not a 2018, 2019 kind of timeline. And I don't think it will replace any national currencies, at least in their current version. Maybe crypto-enabled ones will happen, but I don't see the US dollar going anywhere at this point in time. But I do think that it does enable less, developing nations in order to get access to things that we would normally call securities, at least in America. And that is a huge, huge benefit for the world. I'll actually give you the reverse example as like a really good use case as to how it could help us, and in the same way could help developing nations. Most people in America, through indexes, own some of the FANG stocks, Facebook, Apple, Google, et cetera, right? Because they're the biggest, hyper growth, and everybody knows them and uses them. Great. Everyone in the world wants to get access to the FANG stocks. But up until recently, most people in America actually would have loved to get access to the FANG, the Facebook, the Apple, the Google of China, right? But it's really, really hard, right? I mean, you can go on Fidelity, it's really complicated, but most people don't do it because it's too hard. Well, if you think it's hard for us to access public, Baidu, the biggest companies in China, imagine how hard it is for them to access ours, especially as an average citizen. But with security tokens, you may actually be able to create a representation and mimic the upside, and now people all around the world can get access to financial services that they would never need a bank, that their bank would preclude them from getting access to. So it would be, so yes, I'm very bullish on security tokens.
I'm a bit more skeptical.
Yeah.
In short, I mean, we could, and I'm sure we could go back and forth, but or I'll say it now and you'll be totally convinced. But I think you've got a trusted party when you've got a security. You're investing directly in someone, and we've got a whole infrastructure that was set up to manage that more easily. At least in the work that I did, I found regulations and all of this sort of thing get in the way when you're trying to basically recreate the old system. But I could see how it might happen once you've got a sort of value rail, like, say, Bitcoin or something like that, and people use that as a native network to build more complex assets on top of it. But I think generally trying to recreate the current world on a new technology is far more complex than people think.
Yeah, I think if you're recreating stocks as a security token, less interesting. Where I find it fascinating is creating liquidity in things that didn't have liquidity before. So imagine, take a Picasso painting, right? You can fractionalize ownership of this painting, and all of you can own a tiny little piece of it, and as that value rises, you get a part of that. Or real estate is another example. Real estate is very hard for the average person to get access to that as a financial vehicle. Through blockchain, you could basically securitize as a token. I could create a bundle of Upper West Side real estate, Long Island City, and downtown Brooklyn, and create this asset that people could invest in.
But you need to trust someone who holds that asset.
You do. So in that case, it kind of.
And the Upper West Side's a little inflated right now. All right, we have time for one more question.
Great. Can you talk a little bit about the use case of like blockchain for social good in general, but specifically about refugee resettlement? If any of you know anything about that, and whether you think that is a good use case for blockchain.
So my best friend has got a crypto for refugees company. And
like trade.
It's a plant.
So I'm not a refugee expert by any stretch of. I don't know many refugees, to be honest with you. But what I have heard from the European Central Bank and a lot of Scandinavian countries tend to be more friendly to refugees in particular, that they're struggling with a large number of refugees coming in and then being able to monitor the expenses that they effectively give them money for. Right? It's not so easy as giving them a debit card and then trying to trace it. It's much more complicated than this. And the way they're hoping to do that is, well, what if they could track all these expenses? Could they again justify the amount of money that they're giving to these refugees? If they could justify the money, maybe then they could actually allocate more to the refugees coming, and maybe we can actually encourage them to operate in a certain way. Maybe they could say, you know what, you've got, you're going to spend $100 this week on food. This is a blockchain, this is a system that allows you to track at that level of detail because they're just unable to do it in the traditional financial system.
It is interesting, if you have something like a charity, if they were required to use cryptocurrency to pay, you would know what all the salaries look like, all the vendors they're paying, and make that totally transparent.
Identity, sorry, I know we're running out of time, but specifically digital identity, so taking biometric information, putting that on the blockchain, smart contracts so that people who are moving around from countries and don't have the political support of government identities. That's kind of what I'm curious about.
Identity is a very complex area because what you're trying to do is digitize a philosophical concept, right? Your name is not your identity, right? Your biometrics aren't. These are all attributes or claims on that identity. And the main, because this was one thing that I was it's sort of a second suit of mine. The refugee problem is much more than if we can solve the problem of giving everyone a valid physical identity, then we might start getting there, but we're struggling to do that. And when you're talking about blockchains and this sort of thing, everyone's got to have a private key. So it's sort of a next sort of stage on from there, and there's a lot of dynamics in the whole refugee area that I think a lot of people miss. And there are people that understand it a lot better than me, but it's generally not the technologists that that understand it. It's the UN. It's people that are working on the ground, and they say, look, we don't need technology. We need to just give these people something physical. Because you get problems like, say, well, couldn't you just create it with fingerprints? Well, that's great, except that then you've got an irreversible record of someone's fingerprint on there. You can possibly track all of their information, and an autocratic government may not take too kindly to things that this person's identity has done. So there's the identity space is incredibly complex. I've worked in it enough to come to the conclusion that there isn't one solution. There's going to be lots of different things with various sort of applications, but conceptually, it sounds like it could be good, but there is a lot of things that we've got to work out, and I think that those things are far before where we're getting to building a technology solution for it.
Well, so I think that's the time we have. I was pretty nervous. That went actually pretty well.
You did good.
Yeah, you guys did awesome. All right, anyway, thanks, guys.